Welcome back to the channel, everyone. Today's report might be one of the most important updates you will hear in 2025 about the Iraqi dinar, and before we go any further, I want to give you a powerful reason to stay with me until the very end. What we are seeing right now behind the scenes, in early government chatter, in financial policy discussions, and in investor circles, is a major shift that could affect the taxes placed on every single person holding or planning to exchange Iraqi dinar. Many people are unaware of what is forming, but the early signs point toward the real possibility of heavy taxation on the IQD when a rate adjustment or significant policy move happens. Whether you have a small amount of dinar or you've been collecting for years, what's coming could dramatically change the way you prepare, cash out, and protect your gains. This is not fear, and it is not hype. It is simply information you need to fully understand so you can protect yourself financially. So grab a moment, breathe, and lock in, because the next 22 minutes could save you from serious losses and help you move smarter than the average dinar holder. As we begin today's discussion, let's start with a clear picture of what is happening in the world of the Iraqi dinar. For years, holders have waited to see whether the currency would strengthen, revalue, adjust, or gain recognition on a broader financial stage. Some hold it as an investment, others as a hedge, and some simply as a speculative asset they hope will grow. Regardless of the reason you hold dinar, the landscape around it in 2025 is changing faster than most people realize. Governments are looking for additional tax revenue, financial agencies are tightening oversight, and the global economic climate is shifting in ways that cause world currencies to receive new attention. When a currency becomes the focus of speculation or sudden wealth creation, authorities often move quickly to apply taxes or reporting requirements. This is why the concept of heavy taxation is entering the conversation now, not because something dramatic has happened overnight, but because governments are preparing themselves for what could happen if the dinar gains value and large groups of people suddenly cash out. Whether or not a massive revaluation occurs, the policies being shaped right now could absolutely affect your wallet. Now it's crucial to explain why tax discussions are rising at this particular moment. Around the world, governments are dealing with budget pressures, inflation management, military spending shifts, and economic restructuring. When tax agencies sense there might be an opportunity to capture revenue from a group of people experiencing sudden gains, they often prepare early. This is not unique to the dinar. It happened before with cryptocurrency surges, with precious metal booms, and with foreign exchange events in other regions. The difference here is simply the unique history and long-term speculation around the Iraqi dinar. Some policymakers see it as a target for potential taxation because they believe people holding dinar could receive gains they were not expecting, and therefore they consider it an opportunity to collect a percentage of those profits. This is why you are now hearing words like heavy taxes, foreign currency oversight, and capital gains modifications. These terms are not meant to scare anyone. They are signals that the environment is shifting. Understanding this early gives you time to prepare instead of reacting when it is too late. One of the biggest misunderstandings among dinar holders is the belief that a tax only matters after an RV or rate change takes place. But that is not how governments think. Authorities prepare tax rules long before anything happens, so they are ready to act immediately when money begins flowing. This means that as a dinar holder, your preparation needs to begin now, not later. If heavy taxes enter the picture, they could be applied at the moment of exchange, recorded through banking systems, or triggered by foreign currency reporting requirements. In many countries, people overlook or misunderstand how foreign currency gains are classified. Some jurisdictions treat them as capital gains, others classify them as ordinary income, and some have special categories for currency speculation. Because these rules vary so widely, many dinar holders could find themselves unexpectedly paying more than they anticipated. That is why raising awareness now is so important. The goal is not to make you nervous. It is to stop you from being blindsided. A major point that dinar holders need to understand is that governments do not usually announce new taxes in a way that gives people time to escape them. Instead, new rules tend to appear quickly, often bundled with larger financial packages, and then applied almost immediately. This is why being informed gives you such a powerful advantage. If you wait for a headline or a social media alert telling you, "The tax is here," by then it will be too late to adjust your strategy. The smart move is to assume that tax policies will tighten the moment a major financial event begins. Because, historically, that is exactly how governments behave. Planning ahead allows you to protect more of your gains, structure your exchanges properly, and avoid mistakes people make when rushing under pressure. Preparation is not about predicting dates or guessing outcomes. It is about making sure you have the knowledge and structure in place, so that no matter what happens, you are ready. Let's talk about why taxation on the dinar could be more aggressive than some expect when a sudden increase of wealth enters the system, especially through something as unique as foreign currency speculation. Governments sometimes worry about inflation, market disruption, or unreported income. To control this, they introduce stronger tax brackets or additional reporting rules. Some lawmakers even believe heavy taxes discourage what they consider unregulated speculation. Whether you agree with that or not, the truth is that these policies could land directly on the shoulders of regular people who simply bought dinar years ago with the hope of seeing it increase in value. That is why discussions about tax percentages as high as 20% to 40% are popping up in financial commentary. This does not guarantee such numbers will be used, but it shows the mentality forming among decision makers. When officials think there is wealth to be taxed, they plan aggressively. For dinar holders, the smartest response is not panic, it is strategic preparation. Now, let's break down an essential concept: tax timing. Many holders assume that if they cash out early or wait longer, they can avoid taxes entirely. But that is not how tax systems function. Timing matters, but only within the rules each country sets. For example, some nations have short-term versus long-term tax classifications. Others treat all currency gains the same regardless of how long you held the asset. If heavy taxes are created specifically for foreign currency redemptions, the timing window may be very narrow. In some cases, governments may even apply retroactive rules, meaning taxes could apply regardless of when you bought your dinar. Again, none of this is meant to create fear. It is simply the reality of how financial policy sometimes works. The solution is to plan, not guess. You do not need to know the exact timing of an RV. You need to understand how to position yourself so that whenever activity begins, you are already ahead of the rush and already informed. Another critical factor that many dinar holders overlook is documentation. When people exchange foreign currency without proper records, they often run into trouble during tax season. Governments may require proof of purchase, proof of cost basis, and evidence of when and where the currency was acquired. Without documentation, tax agencies can assume your entire exchange amount is profit, which could place you into the highest possible tax category. Something as simple as losing a receipt could cost you thousands of dollars or more. This is why keeping your records organized is absolutely essential. Take the time now, before anything changes, to create a folder, digital or physical, containing your receipts, purchase history, date stamps, and any notes that help verify your ownership timeline. Doing this one task can dramatically reduce your tax burden later. Let's shift into an important strategy: professional guidance. Too many dinar holders try to manage everything themselves because they think hiring a tax professional is unnecessary or too expensive. But when you are dealing with foreign currency, potential large gains, and complex filing rules, having an expert in your corner can save you more than you spend. A qualified tax professional who understands international tax policy, reporting requirements, and currency classification can help structure your exchange in a way that stays legal while reducing unnecessary taxation. They can also help you avoid mistakes people make when they try to do everything alone, like misreporting gains, missing deadlines, or misunderstanding how the law treats foreign currency conversions. Even if you do not hire someone long-term, scheduling a consultation before a major financial event occurs is one of the smartest investments you can make. Another vital strategy is diversification. If all of your potential wealth is tied up in the dinar, you could face heavy taxes and heavy risk simultaneously. Diversifying does not mean losing faith in the dinar or abandoning your plans. It simply means building a more stable financial foundation so that taxes in one area do not destroy your entire outcome. Some people choose to diversify by preparing to convert a portion of their gains into real estate, stocks, precious metals, or other foreign currencies. Others use safe savings instruments or long-term investment accounts to create balance. The goal is not to copy anyone else. The goal is to create multiple sources of stability so that if heavy taxes occur, you are not relying on a single asset to carry your financial future. Finally, let's address the mindset required to navigate what is coming. One of the biggest mistakes dinar holders make is letting emotions control their decisions. Fear leads to panic. Excitement leads to impulsive choices. Neither emotion helps you keep your gains. The most successful people in situations like this are the ones who stay calm, stay informed, and act based on strategy, not hype. You must think of this like a long-term financial move, not a sudden jackpot. Heavy taxes, reporting rules, and governmental changes are not obstacles. They are realities that you can prepare for. And the more prepared you are, the more confidently you can move when the moment arrives. Remaining grounded, organized, and strategic will separate those who keep the majority of their gains from those who lose money simply because they were unprepared. Another topic that deserves your attention is the importance of understanding how different countries may treat your dinar exchange, depending on where you live, where you bank, and where the currency is redeemed. Many people assume that the tax rules in their home country are the only rules that matter, but global currency exchanges sometimes involve multi-jurisdiction interactions. For example, you might purchase your dinar in one country, store it in another, and exchange it in a completely different region altogether. Each location has its own regulations, and in some cases, more than one country may attempt to apply tax law to the same transaction. Without proper strategy, this can create unnecessary complications or even double taxation. Some regions classify foreign currency exchanges as taxable events only if they exceed certain thresholds, while others tax every cent of gain regardless of amount. Understanding these differences allows you to prepare ahead of time rather than discovering the consequences later. This is why staying informed is not optional. It is essential to protecting your financial future. Let's explore the idea of using legal structures to protect your finances. Many investors around the world use trusts, limited liability companies, or other legal entities to manage assets safely and efficiently. These structures are not designed to hide money. They are designed to provide organization, protection, and in many cases, tax benefits that individuals cannot access on their own. With the possibility of heavy taxes being applied to dinar exchanges, some holders are beginning to research whether placing foreign currency into a legal entity could offer protection or advantages. For example, an LLC might separate personal income from business income. A trust might allow wealth distribution to family members in a structured and tax-efficient manner. Some structures offer better liability protection in the event of audits, while others provide flexibility when transferring assets after an exchange. None of these strategies should be attempted without professional advice, but understanding that these tools exist is important. When used correctly and legally, they can help you keep more of your gains and manage your wealth in a more organized way. Another important subject that many dinar holders overlook is the increasing power of financial reporting technology. Modern tax agencies use software that automatically flags unusual deposits, foreign currency activity, and transactions that appear larger than normal. Years ago, people could exchange currency with little scrutiny, but in 2025, digital monitoring has become significantly more advanced. Financial institutions must report certain activities automatically, and in many countries, banks face penalties if they fail to flag suspicious or unverified currency movements. This means dinar holders cannot rely on the idea that an exchange will go unnoticed or unreported. Everything flows through digital systems now, and tax authorities often receive instant updates when certain transactions occur. Instead of fearing this reality, the smart move is to prepare for it. Understanding how reporting systems work helps you avoid mistakes, follow the rules properly, and remain calm when exchanging your currency. Transparency does not have to work against you if you organize your strategy ahead of time. Now let's discuss privacy, because this is an area where many dinar holders make dangerous mistakes without realizing it. In the excitement of speculation or community conversation, people often reveal far more about their finances than they should. Posting screenshots, discussing how much dinar they own, messaging strangers about their plans, or celebrating early can all attract unwanted attention, and in a world where financial data spreads quickly, oversharing can create risks far beyond taxes. Criminals look for people who suddenly display signs of wealth. Scammers target individuals who reveal financial details online. Even tax authorities may pay closer attention to someone who publicly announces large expected gains. Protecting your privacy is one of the most powerful tools you have. Keep your records secure, limit who knows about your holdings, and avoid talking about your exchange plans with people who do not need to know. Privacy is not secrecy. It is protection. A subject that deserves special focus is charitable giving, because many dinar holders overlook the potential benefits of using donations strategically. Not only can charitable contributions support causes you believe in, but in many countries, they provide significant tax deductions. When a large financial event happens, some investors choose to give a portion of their gains to community organizations, relief programs, or charities that align with their values. Depending on the laws in your region, these donations can reduce your taxable income and lower your overall tax burden. But timing is important. Some deductions apply only if money is given in the same year as the exchange. Others require specific documentation, approvals, or registered organizations. If heavy taxes arise after a dinar rate change, having a charitable plan ready could offer both personal satisfaction and financial efficiency. This is why thinking ahead matters. Preparing now allows you to act purposefully, rather than rushing to make decisions under pressure. Let's talk about staying informed, because the world of currency policy moves quickly, and nothing is more dangerous to a dinar holder than relying on rumors or outdated information. Many people follow social media posts, unofficial channels, or online discussions that mix speculation with misinformation. In a financial environment that may soon include heavy taxation, poor information can lead to costly mistakes. Staying updated through reliable announcements, official financial institutions, and verified policy updates is a major advantage. You do not need to monitor every piece of news every day, but you should stay aware of changes that relate to taxes, foreign currency rules, and banking regulations. Knowing what is coming ahead of time gives you the power to adjust your strategy. Being informed helps you avoid panic, ignore rumors, and focus on facts. Remember, financial success does not come from knowing everything. It comes from knowing the right things at the right time. Another area many dinar holders forget about is emotional control. When talk of heavy taxes begins spreading, people often react fearfully or impulsively. Some rush to sell everything. Others panic and make costly mistakes. But strong financial decisions come from a grounded mindset. The smartest investors do not move emotionally. They move strategically. They understand that fear limits options and clouded judgment leads to unnecessary losses. If heavy taxes appear, emotional stability becomes your biggest tool. You will need to make clear, thoughtful decisions about when to exchange, how much to exchange, and which preparation steps to complete first. The entire situation becomes easier when you are calm, focused, and thinking long-term. Emotional discipline may sound simple, but in reality, it is one of the hardest skills to maintain. Practicing it now puts you far ahead of the average person who reacts without planning. Let's explore the idea of spreading out exchanges over time. Many dinar holders assume they must exchange everything at once, but that is rarely the smartest approach. If heavy taxes come into play, spreading out exchanges could offer advantages by keeping you in a lower tax bracket or giving you time to adjust to any new rules. Instead of converting everything on day one, some people choose to exchange in smaller portions. This approach helps reduce stress, allows you to monitor the financial environment as it changes, and keeps you flexible in case tax policies shift unexpectedly. You do not need to commit to a single plan right now, but understanding the benefits of a phased exchange helps you prepare mentally and financially. Every major financial event requires structure, and spreading out your strategy may give you more protection and more control. Another important concept is the possibility of using different regions or banking systems to exchange currency legally, depending on what is allowed in your home country. Some nations have lower tax rates or more favorable rules regarding foreign currency gains. Others allow certain deductions or exemptions that could help reduce your burden. This is not about avoiding taxes illegally, it is about understanding legal differences in global financial systems. If you travel or already have international banking relationships, you may have options that other people do not. Before attempting anything complex, you must consult a professional, but understanding that geographical flexibility exists is valuable knowledge. It prepares you for the idea that your exchange does not need to be done in only one place, at one time under one set of rules. Flexibility is a powerful asset when heavy taxes are being discussed globally. Let's talk about the real-world impact of heavy taxes and what they could mean for dinar holders. If tax percentages land in the 20% to 40% range, the amount you keep after exchange could be significantly lower than you expect. For some people, this will be manageable because they planned ahead. For others who did not prepare, the loss could be overwhelming. When a major financial event occurs, people often underestimate the power of taxes. They imagine the final number in their head without calculating how much might be taken out. By understanding the possible tax outcomes now, you can adjust your expectations, plan realistically, and avoid disappointment later. Preparation gives you control. It turns a potentially stressful situation into a manageable one, and most importantly, it allows you to protect the value of your hard-earned investment. As we close today's report, let's bring everything together with a clear message. Holding Iraqi dinar in 2025 is not just about waiting for a rate change or a major financial moment. It is about preparing for the responsibilities that come with potential gains. Heavy taxes are becoming a real possibility, and ignoring them could cost you far more than you realize. But with the strategies we discussed, planning ahead, staying informed, using professional guidance, organizing documentation, diversifying assets, protecting privacy, exploring legal structures, and controlling emotions, you position yourself to move smarter, calmer, and more confidently than the average holder. This journey is not only about money. It is about building security, reducing stress, and protecting your future. If you stay disciplined and prepare properly, you will be ready for whatever changes arrive. And no matter what happens with the dinar, you will have the knowledge and structure to make smart decisions that support your long-term success.